Back to another XLM video. It's been a while, it's been a long time. We are still in the midst of a massive zigzag wave A down. So this is now what I believe is happening with XLM. I believe that yes, it's still a zigzag down and we have completed wave B. We've confirmed wave 1. So wave 1 of wave C incoming. I believe that we will not surpass this level. Hang on, let me just, if I can just copy this, let me just label the C. I believe we will see prices go as low as at least 004. That's the same length as wave A, but you know wave C's can be a bit tricky. They can be sharp and nasty, and I believe that there is a massive crash incoming in the stock market soon due to bond yields exploding to the upside, minimum 20% interest rates. I believe this will set off a massive crash in the markets and it'll affect global sentiment across the board. This also applies to the Australian market as well. I just posted a video today just highlighting the intricate details according to AriasWave. And yeah, so I believe that this whole thing has been wave 1 followed by a large, wave A of wave 2. Now, mind you, once we see this, the end of this move, it's going to be very interesting because I believe there's going to be multiple ways to enter this for the long-term upside potential that's incoming once we complete a massive retracement, right? Now, this is not unusual for prices to come back almost 100%, right? It's not unusual. I can show you an example of when that's happened. Wave 2s can definitely pull back. If I have time at the end of the video, I'll show you how they can go very close to the start of wave 1. That's all I think this is. I think it's just a long-term investment for XLM. Given that we're probably going to see, massive stimulus in the future. But in terms of how that's going to play out, I have my suspicions, and I'll touch on those shortly. So I don't think prices will go above the red line because I believe that's where wave B ended, right? So wave B being the end of the internal portion of the zigzag, right? So that part right there, the internal corrective portion of that move right there for the zigzag to then continue lower in wave C in brackets. So that means that the recent move down was a confirmation break below the end of wave D and below the start of wave E, right? So that funky move that we saw the last time I was posting about XLM was a very strange 5-wave move, which is why we saw it produce this type of pattern, basically like a 1, 2, 3, 4, 5. Okay, so it's a very weak 5-wave move. But if you go back here, you could see that the same thing happened with wave C, right? You could see how this complicated pattern ended up being a type 2 weak 5-wave move, which is, they're not very common, but they do happen. As such, there was no rules broken with that one. So it's basically the same as that 5-wave move, which basically says that, hey, look, we want to produce a 5-wave move, but we don't have any strength. So it ends up looking like this. Okay, so yes, at some point here, I did want to short this way too early. Now would be the time to short this right now. Okay, and the reason I say right now, I don't mean you need to do it right now, but this point cannot be broken 16 cents. This 16-cent high I don't think it's going to be taken out. I believe that this is simply just a wave one beginning of a larger move down, and what we're seeing now is simply put a wave A, the first zigzag in the correction for the incoming wave two down, right? So I believe we will see another zigzag in the opposite direction, kind of do this sort of thing, and then down that, and then back again up for a 5-wave move, and then the whole shebang, right? You get a D wave, and then the final E wave, and then this is where it'll just continue lower once we break the end of that wave E. So something like that. Bitcoin still has a little bit to run. I've updated my count on that one today as well, and yeah, I do believe it is going to keep running, but I believe that XLM will just go sideways, right? This is just the way it is with this pattern. That's why it's been suppressed. It's not because it's been suppressed, it's just because the pattern was always meant to be a wave A zigzag down, and this is just the way it's unfolding. It's definitely weakness at the lows here due to, there just not being any strength. I mean, look at wave C. It couldn't even go any higher. So I suppose in a way you could say it's kind of like the apex area of this wave B. If you look at it in that kind of regard, in that kind of respect, then you'd be looking at sort of, this type of triangular sort of area. It now broke out of that spot, but it'll get quickly rejected. Anyone who draws a trend line like this and expects it to mean anything, you're basically just digging holes in the dark. There's no substance to it. If you look at the structure itself, it tends to indicate that, it's basically just setting up for a move lower. So I can appreciate that, it's cool to use trendline breaks, but I think they're only useful in some circumstances when, there is actually a good reason to use them, like the trend is up, that type of thing. But when the trend is down, you've already got a break of basically that trend line there to the, breaking down lower here and then coming back to retest it. So you can look at it in two ways, right? You can be bullish, or you can basically draw the trend line underneath, see that it broke out, and then come back to retest it. Okay, so that's one way to look at that as well if you're bearish. Now, having said that, I don't believe it'll go above 16.3056 or whatever, simply because that's the start of wave one. And if it does break above that, then clearly this analysis is wrong. But the reason I believe it's correct is because this move here was the D wave, and that's basically the D and E, the end of a correction after that massive correction that we had. The massive correction that we had after the first initial wave A down. See, now you got to look at this pattern in reverse. It's not a bullish correction, it's a bearish correction, right? So that was a bear market rally. That was obviously a wave C bear market rally, and then a wave E bear market rally. And you can see that each time you can see that the strength is getting less and less, and not making any new highs either, right? So lower highs the whole way through, which is why is another good reason why it wouldn't happen, and also because of the wave structure itself. So all I can say right now is that if you did buy this thinking that it's going to continue higher, I would probably reconsider. It's not financial advice. That's just what I would do, given that the structure is giving me this type of bearishness, right? So I will be basically explaining the waves in the next video a bit more clearer, into more detail, just to sort of start to get you used to the patterns, and I'll basically start outlining how they operate, and yeah, basically start teaching it moving forward, incorporating those that knowledge into the videos. So just to get us started, I thought I'd bring you this. Thanks for watching.